Here's the 4-hour harmonic, right? Coming out of level 3. I'm expecting price to drop. The 1 hour also gave me a harmonic. So if I get a 4-hour harmonic and a 1 hour harmonic, I can literally go to the 15 minutes and take my trade. Okay, close below 13, back above, back below. Notice there is no more than 4 candles above the first leg. I got a nice out of the band, in the band, RSI below signal, below the market baseline on TDI. Price close below 13 short. All right, this right here is Mona Lisa. If you can line up the 4-hour harmonic and the 1 hour harmonic with a 15-minute pattern and a 1-1 where there's divergence, just like that. All right. Again, sorry for bringing this in 2 separate segments. The previous video it froze up, so I couldn't do anything. All right. So study this, and next week we are going to be talking about the 1 hour 50-50 bounce. I've already actually done the pre-recording for it, so it should be a lot smoother. It should be 1 segment. It shouldn't be 2 segments. Okay. Thanks. I'll see you guys tomorrow morning for the pre-market. Take care. Ciao. With what I was going to talk, what we were talking about last week, and that is the 1 hour harmonic. Okay, that's one of my favorite setups. It's same setup as the ID move on the 15-minute chart. It's the same setup. That's why in the meetup in New Jersey, people ask me what's my favorite setup. I always say the 1 hour 50-50 bounce, because the ID on the 15 is the same setup at the 1 hour 50-50 bounce. All right, so learning one setup allows you to trade 2 different setups, but you just have to master it. You have to know, study all the nuances, because there are a lot of nuances and differences between the 2. Okay, they're almost similar but slightly different. Okay, all right, so take for example here, AJ. All right, so here's my anchor, right? So a 1 hour 50-50 bounce is always anchor 1350 cross, first pullback. That's the basics. That's the fundamental rule, the basic rule of a 1 hour 50-50 bounce. Anchor 1350 cross, first pullback. RSI line is above the signal line, above the static. Okay, if it's above the market baseline, even better. If the market baseline is pointing up, even better. Okay, all things, if you add different things to it, it stacks the trade in your favor. Okay, so here's my move. It happens today. Okay, I wasn't in front of the screen and I was looking at this pair, but that was the move. 1350 cross, pullback is 25 to 50 pips. RSI is above the signal line, above the static, long. Okay, market baseline happened to be pointing up and it happens to be above the market baseline. Lights out, better trade, bigger position. Okay, all right. Aussie New Zealand, same thing. Here's my anchor move. Why is that an anchor? That's my W, ugly W off the blueberry, right? Really ugly W off the blueberry. Close above 13, back below, back above. They shift and then they run. 1350 cross, first pullback. RSI is above the signal line, above the static. Notice it's below the market baseline. Now, this one didn't run as nice. Why? Market baseline is pointing down. See the nuances, right? The previous one, the market baseline was pointing up. Clean, green candle, green candle, green candle, green candle, straight up. Okay? Market baseline is pointing down. I got a green candle, red candle. Then if you take it over here, what happens? Nothing. It goes sideways. Why? The bias on the higher time frame is dropping. So if you're trying to go long with this pointing down, you tend to take more scratches, right? You want to go long when this is pointing in the direction of your trade. All right, you see how it flattens down, it starts pointing up, and this one starts going up like this, and now it's starting to work. Right? So if it's flat, right, if the market baseline is flat, or it's pointing up, then you ideally want to go long. Or if it's pointing down, that doesn't mean it won't work. It just might have a little harder time to get there. Okay, let's take a look at another example. CAD yen. Now, obviously, you're not going to jump in when you know the next hour you're going to have a huge CAD news. As you can see, this is the big CAD news, 113 pips news candle. All right, you're not going to be like, oh, okay, great. It's an hour, so I'm going to take a 1 hour 50-50 bounce trade, but the news is within the 1 hour. No, don't do that. Don't take that trade because you're not going to have enough movement. They literally could just pull back. You're like, okay, great. Now it's doing a 1/3 pullback. And then when the news comes, it's going to drop. You don't know that. Second of all, notice where you are from the anchor. The further away I'm from the anchor, the lower the probability this trade becomes. That's why you want to take these trades within the first level 1 or level 2 move. Okay? Not from here to here is approximately 410 pips, and my ADR is 101. So let's say 100. That's peak. That's level 4. Okay? It's too far off from here. Okay, not to say it won't work. And also the news, but the probability diminishes. Aussie CAD. Now, you're like, anchor. What's an anchor, right? A level 3 anchor, multi-day structures, things like that. Safety is an anchor, right? Obviously on a 15-minute safety, so you look for an ID. A multiple time frame anchor would be an M of the Mayo, M&W of the Mayo. All right, so on a 1 hour or a 4 hour, an M of the Mayo is an anchor. Remember the rule is what? Anchor, 1350 cross, first pullback. Right? So this is my anchor, 1350 cross, first pullback. It happens to be RSI below signal line below the static. And guess what? Market baseline is pointing down. How easy this trade becomes. Okay? Same thing here. This is an ugly anchor. Really high up. Okay? Still an anchor. Why? Because here's my 1350 cross, here's my first pullback, and I'm looking for shorts. Now, this is slightly different. This is a 50-200 cross. This is looking more like a M of the Mayo. If the 13 crosses, even though this looks like a 1 hour 50-50 bounce, if the 13 crosses, it's more like a M of the Mayo. Excuse me. It's more of the M of the Mayo rather than a 1 hour 50-50 bounce. Can you still take the trade on the one leg? The answer is you can, as long as RSI is below the signal and below the static. Okay? Just don't be scared if they come back for a second leg, because it is an M of the Mayo. All right? See, so they hit it, they come back, give you a second leg, and then from here they kind of drop a little bit. All right? CAD Swiss, remember 50-200 cross, M of the Mayo, this is your anchor move, 1350 cross, first pullback. Notice sometimes they'll give you a second leg. So if you take the first leg, it drops about 12-13 pips, close back above 13, you got to kill it. Minus half, 1.5, minus 2. No big deal. The second leg does not have to touch the water. All it has to do is close above 13, come back below. In this example, the railroad track. So it becomes the second leg of a 50-50 bounce. You can short it right from there. Okay? So 50-200 cross, M of the Mayo. If the 13 goes above it, classic anchor. Because you need, for a 50-50 bounce, a 1350 cross first pullback. Okay? So look at it. And so this is your real M of the Mayo. Okay, your out of the band in the band's already way done here. Market baseline starting to roll. This is Doug's favorite setup called a baseline bounce. You take this baseline bounce here. You can't take this trade here anywhere until price closes below the 13 anyway, so it doesn't really matter. I can have all the out of the band in the band at once, but price never closed below the 13 until here. That's my only short I got. 1350 cross, first pullback. Right, notice RSI signal line has not crossed. Nice short, market baseline is pointing down clearly. All right, so you have to know how to manage this trade. Okay, kill this trade. If this candle is too big and you wait for the 1/3 pullback, you're going to take a second scratch. But notice it's -3, -2, -1, -6. Between 7 to 9 pips is going to be a scratch. If you enter the trade on the 1/3 pullback, between 7 to 9 pips is going to be a scratch. Okay. Of course, there are more nuances to these things, but we'll cover them because we got 2 more sessions on 1 hour 50-50 bounces. All right. FJ. Where can we find the 1 hour harmonic? The 1 hour harmonic was done approximately 4 weeks ago. So go back 4 weeks in the DMR in the forum, and you will see. Maybe ask in the car study group in the Skype, and they will actually tell you which date the 1 hour harmonic was posted in. Okay, the indicator is actually posted right below the session, the presentation session. May 10th, Joseph, thank you. All right, so here's your anchor coming off a real level 3, right? Many days of rise, 3 times ADR, EMA is fanned out, all that good stuff. Okay, anchor move, 1350 cross, first pullback, beautiful, classic, short. All right, 50-200 cross, M off the Mayo. Now, 1350 did not cross. 1350 did not cross on this M off the Mayo. I can, with the 50-200 cross, still take the M off the Mayo, but I cannot take the bounce trade because my rule for the 1 hour 50-50 bounce is 1350 cross first pullback. So there's a big difference between this M off the Mayo and where is the other one? I guess 50-200 cross, M off the Mayo with a 1350 cross. So here's an M, half a bat off the Mayo, right? Half a bat off the Mayo, 1350 cross, first pullback. I can take it. This one's the M off the Mayo is still, because that is a 50-200 cross M off the Mayo, but there's no 1350 cross, so I cannot take that. I cannot take the 1 hour 50-50 bounce. Okay. All right. Notice the difference. It's just showing you the nuances, right? NF, here's your example of a M off the Mayo, right? Just like this, but this one 1350 is below. 1350 is above, so 1350 cross, first pullback, and I'm going to look for a short. All right. Sometimes they will give you the first move, right? Now, it could have, RSI could be below the static. In this example, it's not, but maybe on the hard right edge it was. Okay, and you took it, you took the scratch, and then it rolled back over. RSI line now is clearly below the static. You can take that short. Notice it never closed back above the 13, it drops. Okay, so M off the Mayo with a 1350 cross, you can take the 1 hour 50-50 bounce. Sometimes they'll give you one leg and drop like that. Sometimes they'll give you 2 legs and drop. Sometimes they'll give you like this, 2 legs, right? M off the Mayo, take the scratch, rolls over, short it again. Don't take the scratch and be like, oh, I don't know where it's going to go. No, you know the second leg is coming. It's just a matter of when. Okay? When they present, you take it. Okay? I think I am done in terms of showing charts. There were a couple of very nice ones this week. Okay? In terms of 50-50 bounces. All right? This happens to be level 3. This was late. Nice little 17 pip move on dollar yen. I'll probably go for 15 pips. ADR is only 73 pips. Okay. Again, the further away you come off the anchor move, the bigger the risk becomes, right? So sometimes you see a 50-50 bounce in level 3, right? But obviously that's riskier than if it's a level 1 or level 2. Okay. And sometimes they look really ugly. Sometimes they're between the EMA, so you just simply pass on it. It has to be 2 pins, not 1 pin. Okay. Now don't be like, oh, okay, so I'm in level 2 long, so this is my anchor 1350 cross, I'm going to go short in here. No. You line it up with the levels and you take it. So if I'm in level 2, I'm looking for longs, and this one shows me short, I'm not going to take this move. I'm going to wait for them to create the anchor, and then I'm going to wait for that bounce trade to go long from it. All right. Now, whenever you see, like for example, here 50 don't cross, you see the 1350 is between the two EMAs. I'm simply passing on this because I've noticed when this 1350 is between the EMAs, that's when you get messed up the most. All right. It tends to do all kinds of stupid things. You'll notice it, homework it, and you'll notice whenever the EMA, that's why I say, oh, the 13 is between the two EMAs. Doesn't mean price so much, but 13, because it's a little bit slower. Whenever it's between it, I think, I'm not looking at that pair. I'm not trading that pair. Okay. This was very nice. See, M off the Mayo, 1350 cross, first pull back, short. I took that trade. It was amazing, right? If your stop is 23 pips, go for 23. 1-to-1. All right. You will see if you look at 50-50 bounces, you should get anywhere between 3 to 5 1 hour 50-50 bounces a week. If you're just trading 50-50 bounces, look at all the pairs. Understand that if you're trading low ADR pairs, you're using ADR 1 or 2 times ADR to trade. You're not going for 1, going for 30 or 50 pips. It's not going to work. All right. And if it's not clean, if it looks like this kind of a thing and you don't like it, you just simply pass on it. Don't trade it. Okay, just take the clean classic ones where you're like, okay, cool, I see it, I understand what they're doing, I'm going to take that trade. All right, when it's clean and classic, not see, like this is not the best. I know it's a reset and resets the new anchor, and I do have a 1350 cross coming in here for a 50-50 bounce short. Okay, but if this is not clean as an anchor, just don't worry about it, don't take it. Okay, remember level 2, just because 1350 cross doesn't mean I'm going to take it. If level 2 is the M off the Mayo. So there is no 50-50 bounce in here. Okay, even though it's level 2 and the 1350 did cross, in level 2 is an M off the Mayo. That's your anchor move. Then you look for your 50-50 bounces. Doesn't mean on the 15-minute chart you can't trade the M and W off the Mayo, which is what we will cover later on in the next after 2 weeks. Okay. All right, questions? Oh, Lisa, good job on AJ. 25 pips, nice. All right, I don't see anybody asking any questions. All good. Okay, cool. So I'm gonna let you guys roll. I will see you guys tomorrow morning for the pre-market. Jack, thank you, appreciate it. So the 1 hour rules are the same, so we're all good. Yep, exactly the same. Same thing, right? Just homework it a little bit. I'm just trying to start giving you some, because sometimes that 1 hour 50